Ever wondered how seemingly random market fluctuations might actually be the result of index trade manipulation? Or perhaps you've questioned how certain traders always seem to have the upper hand. Well, it's not all smoke and mirrors. It often boils down to the effective use of tools like the Fibonacci tool. In the world of trading, one of the most widely used and respected tools is the Fibonacci. Named after the famed Italian mathematician, this tool is based on a sequence of numbers where each number is the sum of the two preceding ones. But how does it work? How can it help to avoid false entries? Picture a market trend, be it an uptrend or a downtrend. The Fibonacci tool is applied from the high point to the low point in an uptrend, and from the low point to the high point in a downtrend. Once applied, it will project horizontal lines across your chart at the key Fibonacci levels of 23.6%, 38.2%, 50%, 61.8%, and 100%. These levels are often areas of support in an uptrend and resistance in a downtrend. To draw the Fibonacci tool for perfect entries and exits, start by identifying a significant swing high and swing low. Then apply the Fibonacci tool from the swing high to the swing low in an uptrend, and vice versa in a downtrend. The horizontal lines drawn by the tool will provide potential entry and exit points. But what about avoiding false entries? This is where the Fibonacci tool really shines. It can help to validate or invalidate potential trades. If a price reverses at a Fibonacci level, it provides a strong indication that this level might hold in the future. On the other hand, if a price breaks through a Fibonacci level, it often signals a stronger trend in the direction of the break. Using the Fibonacci tool for long and short positions works in a similar way. For a long position, look for a retracement to a Fibonacci level in an uptrend before taking a position. For a short position, look for a retracement to a Fibonacci level in a downtrend. In summary, the Fibonacci tool is a powerful ally in the world of trading. It provides key levels of support and resistance, helps to validate or invalidate potential trades, and offers guidance for long and short positions. Remember, no tool is perfect, and the Fibonacci is no exception. It should always be used in conjunction with other tools and analysis, but when used correctly, it can give you a significant edge in the markets.